moving on with the second part on how to trade binary options in a volatile environment. And while on the first part we were discussing this volatile environment basically being surrounding or around an important economic event to be released, like a press conference or an interest rate decision or the non-farm payrolls like it is today in the United States. And prior, 24 hours, let's say, prior to towards the announcement, normally no market participant is taking any chance into going long or short or going aggressively in one direction, and that defines a range. And the range can be traded with an oscillator on the lower time frames, like it is the 5-minute chart, in this case the Euro-US dollar, trying to buy call options on a move with the RSI into the 30 level, and trying to buy put options on a move with the RSI into the put options into the 70 level. Now, what to do after the actual release or just before the actual release? Well, the same pair, we should move on the bigger time frames, not the 1 hour chart, but we should go in the 4 hour chart, in the daily charts and so on. And of course we look then for a bigger expiration date than the ones that we traded before the event. And we need now an indicator on the chart, either a trend indicator traded with moving averages, or you are going with the one like it is the Ichimoku, and you put the Ichimoku on the screen and it looks like this. So what do we want to see on the 4 hour chart and so on? We want to buy, in this case, put options on the Euro-US dollar, because let's say that the non-farm payroll is going to be negative for the dollar, so the Euro-US dollar is bouncing. Well, first of all, the cloud is red, which represents bearish conditions. The Chinko and the Tenkan and Kinjun are still bearish, not even across. So, in the event, on the let's say, on the case that the Euro-US dollar is bouncing higher here, I would like to buy a put option into the 1865, into the Kinjun line. I would like to buy a put option, of course, into this area, as normally it should be a resistance, a bigger resistance. So while trading short-term expiration dates based on overbought and oversold level on the 5-minute chart before the event, the idea is that during the event, because of high volatility levels, we should raise the to move to a bigger time frame and look for support and resistance levels. The bigger the time frame, the stronger the support and resistance level. And of course, the expiration date should be moved as well, should be changed as well, in the sense that we should see then an expiration date like end of day expiration date, or even 1 week expiration date, depending very much on the time frame one is looking at. Well, this is how to trade binary options in volatile environments. First with the ranges, second with support and resistance. Thank you for being here. Have a great day. Bye bye.